All right, so we got some breaking news from Elon around FSD subscription. I think this is probably one of the biggest pieces of news when it comes to earnings per share estimates to happen this year. I'll talk about what just happened. I'll talk about my role apparently into this. So I tweeted out this morning that if Tesla lowers their FSD subscription price to $99 a month, I bet their take rate would go over than 25%. Elon just a few minutes ago as I'm recording this likes this tweet, and Sawyer is now retweeting it, daring Elon to do it. Look, first of all, I just want to say it's ironic, it's funny. I don't know how I always end up in these weird situations. Just 2 months ago, I was getting flamed because Elon replied with 500 paragraphs on my thing about how he wants 25% control. And now we're getting FSD subscription pricing updates. First of all, 12.3.3, I think is epic. It's such a good up. Like it's FSD has been like my first experience this month with it. I've only had autopilot, and FSD is awesome. At $99 a month, it's really a no-brainer. When I tweeted this, was thinking 25% is kind of conservative. I don't want to be hyperbolic about it. I don't want to put something crazy like 50% like I see a lot of people tweeting at me about. But 25% is pretty decent. In this video, I want to go through some of the math behind this and what it means for earnings per share, because I think this is really being missed by Wall Street. And I wonder if prices go down to $99 a month, how that will change the EPS landscape for this year. And then by proxy, what does that do for the stock, really? Because I mean, that's really in the context of what we're looking at this from. What does it do for financials, right? Because, I mean, take rate would explode. Now, first, I just want to actually, I'll show you my FSD spreadsheet here. But, you know, before I even get to that for a second, someone tweeted at me and they asked a question. They said, Yash, well, if it's $200, do you really think more than double the amount of people are going to subscribe to FSD than when it's $99 a month? Meaning, why don't you just price it at $200 a month like it is today? Because you're not going to get more than double the amount of people subscribing to it. Meaning, if it's 12.5 is the take rate right now, will you really? And even if you get 25, it's kind of a wash, right, in terms of revenue. Here's why I don't actually buy into that. I think it's an exponential demand curve going down. I think every dollar that you increase it, especially lower than $100 a month, I think there's an exponential amount of people that will buy FSD subscription, considering how much of a driving aid it already is. But let's get into some of the financials about it, okay? Because I think this is what matters, what's going to happen to EPS, right? So let's go through some of my assumptions. First of all, we have to know that Tesla sold roughly 6 million vehicles. Now, out of 6 million vehicles in North America that could actually buy this FSD is about 2.5 million. Now, remember, these are big fat rounding numbers, right? More or less, this is just a very rough modeling of this. At 2.5 million cars and an FSD take rate of 25% at $99 a month, and by the way, I'm assuming 80% margin on this, right? Meaning every dollar that Tesla earns, 80 cents hits its bottom line. Because remember, Tesla pushing an update to my car doesn't cost them anything. Tesla's already proved this with the 30-day free trial, that they can send this update to my car. It doesn't cost them anything, and they can make money out of it. It's actually, honestly, I should probably put it at 90%. Our monthly recurring revenue just with these numbers is about $62 million a month. Per year, we're looking at about $750 million, so $750 million of revenue coming in from this, right? $750 million of revenue. And what that translates to, and you can already see it down here, there's about 3.18 billion outstanding shares of Tesla on the market today. If I divide our annual recurring revenue by the number of outstanding shares currently in the market, we're looking at about a 23 cent increase of EPS this year, right? This year. And don't just look at it from the 23% perspective. Number one, it's going to grow exponentially as Tesla's number of vehicles grow in the market. But number two also is the amount of just the multiple that software companies like this model get is very outstanding. Let me just prove my point here. You'll see market cap FSD have $0, and that's because I haven't plugged in what a PE is yet. You know, Wall Street really, really likes monthly recurring revenue businesses, high margin businesses, high margin, specifically SaaS businesses, because every dollar, every new customer that you get is cumulative, right? They continue on every single month, minus your churn. But every single month you get new users coming into your fleet. Now, we already know Tesla is sitting at what, like a 50 PE currently. I think a software business can easily get double that. But let's put in a 70 PE, and we'll play with some numbers here. Don't lose your mind. At a 70 PE, meaning a 70 times yearly multiple on FSD, the market cap of FSD is about 50 billion, right? Give or take. 50 billion on that, meaning 50 billion of marginal market cap on Tesla today. And Tesla's sitting at what, 500 billion or something like that market cap. I can pull up Webull here in a second. So, and that's, of course, assuming a 70 multiple. But even if you give it a 60 multiple, a 50 multiple, you can see that there's a lot of incremental value here that Wall Street would have to give Tesla should they start pricing in some of this FSD stuff, right? Now, remember, this is just with the current fleet, with the current cars eligible in that fleet. If we just flash forward 5 years, right? And Tesla now has double the amount of eligible cars that can subscribe to this. You can see here, these numbers get pretty nutty pretty fast, right? Because at $99 a month, 25% of all people eligible for this can subscribe to this. And let's say 25% is even conservative in this case. You can see FSD market cap approaches $100 billion. And so as you go into perpetuity and Tesla builds millions and millions and millions and millions of cars, and you flash forward, I don't know, 10 years, 15 years, whatever it might be, let's add in a extra couple of zeros there, you can see FSD really starts to get nutty here. Maybe the multiple comes down, and we can play around with these numbers to see what that incremental is worth. But it gets kind of nutty, right? 556 billion, by the way, is Tesla's market cap right now. So just the FSD pricing it out with this way, I mean, you can have your problems with it, whatever, but this is just a rough back of the napkin valuation of FSD. Now, what happens if Tesla goes, you know what? $99 per month for FSD, but for $129, you also get premium connectivity, and you get 1 free, or 50 free or 100 free kilometers of supercharging a month. Maybe to throw that into as a pack, as like a value pack, right? Doesn't really cost them anything. Maybe margins go down a couple of points from the supercharging cost, the actual electricity, but premium connectivity really doesn't cost them very much, right? The variable cost is quite low. It's mostly fixed. You start to see how these numbers from 129 Tesla market cap with these numbers in, let's say, 10 years is 261 million, up from 200 million. So you can see the incremental value with every dollar earned is exponential almost, right? It's quite insane, actually, these numbers. Now, these aren't into real nutty territory, because if we start putting in like $4.99, because this is a robo-taxi fleet, you can call this kind of a robo-taxi light model if you wanted to plug in $4.99 and no rev share. But let's just exclude that from now and keep it at $99. Let's keep these cars sold at what they're currently at, which is 2.5 million cars in North America right now. 25% take rate is, would Elon like this tweet if he's not kind of roughly looking at the same numbers himself? I don't know. I think this is a signal for us as we move forward. And now, one thing I want to look at with that EPS, you might be wondering, look, what does 23 cents EPS this year mean? Well, here's what it means. First of all, Morgan Stanley, Adam Jonas, predicts for this fiscal year, 2024, Tesla is going to earn $1.20, I think, is what he has it, right? So 23 cents is quite the material change in EPS incrementally if this happens. Number two, Gary Black actually shares a Bloomberg screenshot for us. And if I move, actually, I don't even need to move my fat head. You guys can look it up here. 2024 yearly estimate on Wall Street currently for EPS is $2.84, which I have down here. $2.84. And so that's a change of EPS overnight, if this is modeled in, and it currently isn't, let's say, of 8.23%, right? Now, remember, this doesn't sound like a lot, but remember, this is compounding, right? And whatever multiple you throw on this is going to be higher than the multiple that you give this auto business, let's say, just by definition. And so when we look at just the number of cars that Tesla is slated to deliver, and actually maybe I can show you, actually this might be a bit better if I just move myself. If you look at vehicles sold, right? Just this column over here, look at vehicles sold. you'll see Wall Street has Tesla in 2030 delivering 5.3 million cars. Okay, 5.3 million. I'm guessing if you're watching this channel, you probably think Tesla will deliver more than 5.3 million cars in 2030. Drop me a comment if you think so. But if you aggregate, if you sum up all of the vehicles sold in the next few years and you add a 25% take rate off $99 off of this, the numbers get wild really fast. And so what I think is we might be at a position now, and I'll pull up Webull, where Wall Street might find themselves with their pants down a little bit here. FSD trials are coming to end at the end of this month. Pricing should be out way up, maybe at least a week before that is my guess. Here in Canada, we don't have FSD subscription yet, so I guess that'll be the first tell. But if Wall Street finds himself in a position where they haven't calculated for any of this incremental revenue and margin, we might see kind of a tail chasing event go on where one after another might have to play catch up to capture this extended EPS run that we might have. And so as we sit here on Tesla stock at 174 and we try to hug the 300 week moving average, really kind of weak territory, generally speaking, it might serve as a good base for us to look higher from. Now, again, Wall Street has to buy these numbers, number one, or they have to be so late that Tesla has to deliver the numbers. And I think this goes to show with NVIDIA. Remember what happened with their incremental AI revenue. It wasn't until they printed it, caught everyone off guard, and then said, look, we're going to continue making billions and billions of dollars more off of our AI chips, that Wall Street had to play catch up on. And I think we might be in it the same way here with Tesla. So anyways, that's my analysis on FSD subscription. Again, I'm going to preface all of this. Maybe I should have said this in the beginning, but this is not confirmed. It's not like $99 per month is confirmed, but why would Elon like it? The public pressure here, actually Sawyer has quite the say in Elon's ear as well. It seems like they're considering dropping the price one way or another. And drop me a comment down below if you have a Tesla at $99 a month. Is it a no-brainer for you to subscribe to 12.3.3, or I should just say FSD, right? And granted, I guess it goes without saying you'd have to live in America or the US for it. But for me, at $99 a month, really, I mean, I'd say it's kind of a no-brainer, even as a driver assist, that is. So, all right, much love. Yash sign off. I appreciate you guys tuning in. And leave me a comment down below. Hit like and subscribe on your way out. Thanks for supporting the channel to everyone that does. I will catch you in the next one. Peace out.